Welcome back. You're watching Commodity Champions. Now we turn our attention to the recent advisory on digital gold. The market regulator, Securities and Exchange Board of India, that is SEBI, has warned investors to be cautious before investing in digital gold or e-gold. SEBI stated that instruments covered under its regulatory framework include exchange-traded commodity derivative contracts, gold exchange-traded funds offered by mutual funds, and then electronic gold receipts traded on stock exchanges. However, anything outside of these, like digital gold, e-gold, is not notified as a security nor regulated as a commodity derivative, and therefore poses risks to investors. To understand the implications of this advisory and why this was flagged, we speak to Gaurav Mathur of SafeGold. Gaurav, hi, thank you so much for joining in. And this is not the first time that SEBI has come out with a warning like that. This perhaps is the second time in 3 years that we are hearing something like that. One, what is your reading on that? And two, as a company who has been in the business for the last 5 to 8 years, how are you reacting to this?
So, Manisha, thanks for having me on the show. I think, well, we always try to look for the positive in sort of all the situations. I think two things are clear. One is obviously it's a growing market, and the fact that it's a free competitive market, and obviously customers are loving digital gold as a product. It's growing rapidly, growing in leaps and bounds, because people ultimately have the convenience of a financial product, and they can get physical delivery whenever they want. And I think that is driving popularity of digital gold. Now, when any product that is not regulated by the financial regulators, I guess growth in popularity this sharply, that's when the regulators start taking notice. I think for us as an industry, not just us as a company, but as an overall industry, we've always wanted to be regulated. I think we've made numerous representations to various authorities, various regulators, sort of inviting them to develop a regulatory framework for the business. And I think I take this as a signal that the authorities are looking at the growth of the industry, and they will hopefully come out with a regulatory framework which will help us grow sort of even faster, build more robust protections. That being said, I guess my takeaway as a consumer should be that, look, there are obviously multiple players active in the digital gold business. It's dominated by a few, 3 or 4 large players, but there are lots and lots of small players. So as a consumer, my takeaway would be, look, do your due diligence, look carefully at who is your digital gold provider. Don't just blindly go and buy digital gold. When it's not regulated, it means that, each player is quite different. So, all of the large players and ourselves particularly, we have great protection in terms of, the trustee custodian structure. So customers don't take any counterparty risk on us. When they buy gold from us, the money goes to the trustee. Only when there is gold in the vault does the trustee release funds to us. If we were to be insolvent, the gold stored in the vault is protected. The trustee will distribute it to the customers. It's 100% backed, in fact, a little more than 100% backed. So we'd like to believe we're a very, very robust structure. Customer protection is in place, but not every digital gold player has this. So my net takeaway is that, be careful with which digital gold provider you go with. And, obviously the category is doing well, and hopefully the authorities will come up with a regulatory framework for the industry in time.
Gaurav, before the break, we were speaking to Vikram from Nippon, and he said even as we are hitting record highs in sense of ETFs, it still is just about 2% of the total AUM. And this is after many years, really, but clearly the last couple of months is what really matter right now. So if you are looking at ETFs as just 2% of the market, I'm assuming digital gold could be around that or even lower?
So if you just look at inflows this year, net inflows this year, my best guess is we're about 70% of what gold ETFs are, so we are a little lower. And AUM will also be lower. Now, ETFs have been around for 20 years, digital gold has been around for 6 or 7 years. So yeah, I think AUM is far lower, but it's growing much faster than all other categories. So I'd say if you look at overall growth, it's the fastest growing avenue for investing in gold in India.
Gaurav, also comment on the fact, how long have you been around? And in the last 6, 7 or 8 years since you've been around there, how many more partners do you have at this point in time? Because the kind of names that we see, and these are all very, very big and credible names, right from apps to fintech companies to trading platforms to even jewelers for that matter.
So we have 135 or 140 different partners, and these are all household names that we work with, people like Cred, Jupiter, PhonePe, Amazon, Tanishq, Bluestone. So there's a vast range of, both fintech platforms, e-commerce platforms, and the large jewelers that work with us for digital gold. And the other thing that we're very proud of is, I think, not just us, but all the Indian digital gold companies, we're the leading digital gold market in the whole world. So we are now going out to, Singapore, Thailand, Vietnam, UAE, Saudi Arabia, and then hopefully go to the West also. But it's Indian companies that are leading the way and are the market share leaders in digital gold in all of these markets and growing rapidly. So I think this is one industry that we're very proud that, India is by far the market leader. And I think regulations are more amenable in other parts of the world. Regulators are a little more nimble, giving us formal licenses. So it's a market, not just that we have 100, 120 partners or 130 partners over here, but many other countries. We've got all the leading banks in the UAE working with us. We've got the largest mobile company and largest fintech, both in the UAE and in Thailand. We have banks in Singapore. So it's just very, very large institutions across the world that are working with us, not just in India.
Gaurav, so as you mentioned, you made various representations to the government, and clearly the regulator is taking notice as the market seems to be growing the best at right now. What kind of regulations would you want? What are these representations that you have made to the regulator, and why is it not getting sorted? Because kind of numbers that you're sharing, and the fact that you're not just now working in India, but outside India as well.
So I think the heart of all regulation, if you were to distill it down, is customer protection. And this just boils down to the fact that if a customer buys 10 grams of gold, the regulatory framework has to ensure that there is 10 grams of gold kept in the vault. It is secure, and nothing happens to that 10 grams of gold without the explicit direction of the customer. I think that's the first part. But the second part that we've really spent a lot of time trying to educate the various authorities about is that we are fundamentally the only way or the best way to actually reduce imports of gold in the country through the metal leasing program that we run. Now, we pioneered that in the world. Now, again, India was the first country in the world to have retail metal leasing. We're the first company that did it. And what we do is we let people lease out their underlying gold to jewelers, and many of the large established jewelers work with us, and they borrow gold, which is owned by consumers. And this directly reduces imports. We've now, in fact, teamed up with a bunch of jewelers, and we collect physical gold. So if you have a gold coin at your home, you can go to a partner jeweler, deposit it with them, and you can start earning a yield on this. I think in the last 6 or 12 months that we've been doing this, I think we've collected more gold than most banks have collected under the gold monetization scheme. So we're directly reducing imports, mobilizing, the 30 or 35,000 tons of gold that Indian households have. We're actually mobilizing that, bringing that into the market, letting them earn a yield, and reducing imports by that amount. So I think the main demand with the authorities is that, please make a framework for digital gold leasing or for gold metal leasing from retail customers, and it can revolutionize the overall financial sector. I mean, to give you a simple sense, and I'll use dollars because the numbers are so big, we've got about $850 billion of just gold coins and bars owned by Indian households. This is not jewelry, just gold coins and bars. And our narrow money supply, M1, is about $730 billion. So you've got more, gold coins, which is a hard currency asset that you can use, that is sitting idle in Indian households. And the government's tried the gold monetization scheme. It's been a spectacular failure. We've shown a path how it works. If you could just regulate it, we could actually, pull some of that $850, $900 billion of gold coins sitting in people's households and lend it out on a much larger scale. You can lend it globally. You can, get capital. India can be a provider of capital to the world because we've got so much gold. And if you have a good framework, we can actually be the global leader by a huge margin in this sector. We have the technology. We've proven that it works. And if we can get a great regulatory framework for it, I think we can really build a world-beating sector which will help India, but it can also, dominate the entire world.
Gaurav Mathur, thank you so much for joining in and explaining that. So as you said, it's a great product and a lot of upside to it as well, and a lot of positives, but just that the government doesn't regulate it yet, and that is what is creating all of this uncertainty, especially with SEBI coming out and warning it. But as Gaurav tells us, that there is a lot of work being done, not just in India, but outside India as well with SafeGold. Well, that's all the time that we have on this edition of Commodity Champions. Thank you for watching.